Neither Better Trades or any of its personnel are registered broker-dealers or investment advisors. I will mention that I consider certain securities or positions to be good candidates for the types of strategies we are discussing or illustrating. Because I consider the securities or positions appropriate to the discussion or for illustration purposes does not mean that I'm telling you to trade the strategies or securities. Keep in mind that we are not providing you with recommendations or personalized advice about your trading activities. The information we are providing is not tailored to any particular individual. Any mention of a particular security is not a recommendation to buy, sell, or hold that or any other security or a suggestion that it is suitable for any specific person. Keep in mind that all trading involves a risk of loss, and this will always be the situation regardless of whether we are discussing strategies that are intended to limit risk. Also, Better Trades personnel are not subject to trading restrictions. I and others at Better Trades could have a position in a security or initiate a position in a security at any time.
Hello and welcome back. I don't remember if I used this one last week or the week before. No, I don't think I did, but it's an awesome one, I think, by Henry Ford, of course. I mean, one of the greatest men in recent history, if not of all time. But I love the quote: "Failure is an opportunity to begin again more intelligently." And if we take this and apply it to trading, and we apply it to each individual trade, if you make a mistake or you do something wrong that you recognize was a mistake, then obviously you can fix it and not do it again, right? That's always the challenge. But the question is, do we actually do that? Do we actually fix it? And the ultimate question for me is, do you get to the root cause of it? Because obviously our emotions and fear get to us, and we make decisions that we may not normally make because of the deep-seated fears, the deep-seated emotional, subconscious things that are there, programming, that cause us to continually make the same mistake over and over and over again. But if you actually get to the root of why you made the mistake and you address that, then obviously that's where the correction starts. Kind of like I talked about habit before with there's the cue, the routine, and the reward. If we identify the cue, we figure out what it is that's causing us to do the same thing over and over, make the same mistake over and over again. Now, if we've identified that, now we can change the routine. And then by changing the routine, we eventually change the reward. And sometimes changing the reward is just a matter of shifting mindsets, different perspective. In fact, that book they were talking about, Tony Dungy, the football coach, the Buccaneers football coach. Buccaneers were the laughingstock of the NFL, basically. And he came in, he understood these three concepts, and he understood the routine. He says, I don't want to change the cue. We want the cues to stay the same, but we're going to change the routine when taken off of that cue. When this happens, essentially he knew that if you can create players, football players, that don't think, that just react, they have a habit of doing certain things on the field, just like in the military. Military uses the same thing. Right? You train and you work day in and day out to create habits so that you don't have to think. Because in situations that are intense, you don't have time to think. You have to create habits that create reactions that create good results. And trading's no different. You have to have the cue, you have to change the routine. So when you recognize the cue, when you start to feel that certain emotion, the way that you're starting to get scared because it might go against you, it might do this, or maybe it's close to your stop, whatever the case is, then you have to change what you normally would do. First, you have to recognize the cue and then change the routine. And then the reward will be different. Anyway, enough about that. So once you see that, then you can begin again more intelligently, right? So let's go through the candidates this week. We've got 17. Only a couple rollovers. So, and ABC AmerisourceBergen, looking at a nice little downtrend over the last few months. So obviously the trend is working in our favor. We popped up a little bit. We had that big bounce to the upside. Was actually looking at a bullish candidate last week with this. And it did pop up a little bit this last week, but then it dropped right back off. So what I'm looking for here, and essentially we made that big move and then we've gone sideways. The volume's dried up. Looking now for a bearish break to the downside. So, in fact, when we look at the indicators, and this is part of the reason, is you see Stokes and MACD both rolling over. So the indicators, the trend is down. The indicators are looking bearish. So a break below that support level would probably put a pretty high odds chance that it's going to drop off there to 92. So we got about $3.50 of potential there. Aetna. Again, nice downtrend. You can see pretty good looking downtrend, actually. Pretty solid, and just a nice steady move. Nice retracements, nice pullback. Again, if it breaks, it's already dropped off quite a bit, and these are the things I don't like. And when we look at talking about odds, um, the odds of a fall continuing are pretty slim. The odds are, especially when you look at what it's been doing the last few months, the odds are that after a fall like this, we have a retracement. So realistically, this should come up to, well, if we draw this line on here, which put it right in that area, it should realistically bounce up to about 110, 112, somewhere in there. We could move this up a little bit here. So it should bounce up to about there realistically, but it could just continue to fall. If it does and it breaks that $100 level, then we could be off to the races. And $4.5, $5 potential, and it doesn't take long. I mean, this thing did 110 to 103 in 2 days, so it moved 7 points in 2 days. So a 5-point move could happen in 1 or 2 days, and that's all we need, right? Ambarella. This is one that has some big potential, and I love it. I'm almost positive this is healthcare. It doesn't give us a sector, subsector, but I'm almost positive it's a healthcare company. Fairly new one. Double top up there, and it's been dropping ever since. I mean, we were 130 there. This doesn't look that significant, but when you go here, you go, that's a huge drop. 130 down to 50. I mean, 80 points. That's what is it, 80? That's 60%, 65%. It's a lot. But you can see everything is looking bearish. The bands are starting to expand a little bit, especially if it drops off on Monday and trails off. Then there's some pretty solid potential here. And this is the beauty of it. 48 down to 35. That's 13. It's about $12.5. $12.5 on a $48 stock. I mean, that's 20%. Is that right? 20% drop has some pretty serious potential. And really the only thing slowing it down are some, in fact, I don't even know if those should be large. These should probably be small. They're not very significant support levels. Those are areas that I would look at possibly scaling out or putting a tighter stop, trailing it at 45 and 40. But you notice each of those levels are about $5 a piece. So I love the looks of this stock. It's not only moving down, it's been going lower. The potential for a big move and a huge rate of return are there. And that's what I like about it. So I always like the giant home runs. I mean, if this thing moved in a week or two down at 12, 13 points, you're making a killing basically. So, but first it has to do that. So AMSG, Samsung, big bearish engulfing pattern on Wednesday. Little tiny bearish engulfing Wednesday. We had a little bullish engulfing on Friday, even though it's after a 2-day drop wouldn't really be considered a bullish engulfing, but it's back below that trend line. It tried to break out on Tuesday, or it did break out on Tuesday, but then it fell right back on Wednesday. So I think this is going to be pretty bearish from here. It certainly looks like it. So leaving that bearish, this is a rollover. Actually should have marked it, but this was exactly what the plan was last week before it broke out, and now it looks like it might want to play ball to the downside. So, and this one has about 6 points of potential. That's 7-8%. So APC, and for some reason I did not get 57.85. Did not get that on there. This thing's been around for a long time. Oh, Anadarko. What's APC? Look at this. Look at the head and shoulders there on a weekly pattern chart. Interesting to see where that goes to, because that might be a long-term target. I'm not going to make this exact, so I'm just going to wing it here, but it's just curiosity more than anything. 40 points. Yeah, it'll be interesting. Watch this. We'll drop a line on there. I'm just having a little fun real quick. Oh, what do you know? Look at that. And there's old resistance back in 2000. It wasn't quite support in 07, but it certainly was in 2010. Interesting to see if it does that. I wouldn't be surprised at all in the next probably 6 months to a year. So that could be a longer term trade. But on a short term basis, and this is the other thing, it's dropped off so much that I'm a little skittish with the move to the downside. I mean, the odds are that it's going to bounce back up. But with the momentum, I mean, you look at the volume. I mean, huge volume, huge acceleration of the downside. So if it rolls over and drops, then 58.50 down to basically 52.5, you got about 5 or 6 point move, about $5 of potential there. It could do it in a day or two easily. So if that momentum continues, then that's a good thing. We can take advantage of it. So same thing with Bluebird. This is one that we're looking at the week before last, looking at it dropping off and breaking that support. It didn't do it until, well, it finally did late in the week, gap down through it, and then it's been going sideways ever since. So I love the looks of this as of right now. It's a little bit below the entry point, but there's so much potential. I mean, 72 down to 45. It's 28 bucks, I think it is, 27 and a half. Huge, huge, huge potential here. So, and it very well could do it very quickly. So, lots of ones this week that have huge potential. We just need to have them play out the way we want it to. So, not sure what's up with this on the city 52.89. Not sure why I have a second line here, but City Group. Big bearish engulfing pattern on Wednesday, dropped off. Nice little doji Friday after a Maribozu on Thursday, right? They're throwing out all the terms now, right? There's one of the kickers. I knew there's a couple of these too where the 200-day comes into play. So it's broken back below the 200-day, which it hasn't really recognized it in a significant way, it doesn't look like. So I don't want to put too much stock in that, but if it breaks below that 53.10 and continues, there's a little bit of potential. And this is only, it's $1.70. So not a huge, it's the opposite of blue and some of the other ones that we have, but the options also aren't terribly expensive either. So, and there's lots of liquidity. So you give up one thing for another. CME, big potential. Well, I guess it's only, 97, 8.5, 9.5 bucks. So about 8 or 10%, somewhere in there. Evening Star, we had follow through on Friday. We just need this thing to pop back up a little bit because it's too far. I mean, it's $1.50 away from the entry point. So CME is not ready yet, in my opinion, but we'll see what happens. So Delphi, breaking back below that little support there at 81.20. And there's the thing I love about it. There's the 200-day moving average. You can see Stokes and MACD both looking very bearish. We've got the shooting star kind of pattern the day before, almost a kind of an evening star. It's stretching a little bit, not a lot actually. That's quite a bit of a stretch, but accelerating volume on the downside. So it looks pretty solid right now for a bearish move there. Digital Realty, this is one I think. A lot of times I don't stretch these big time, but Head and Shoulders. I would call it a mini Head and Shoulders. The pattern actually looks really good. I mean, it's clean, it's textbook. The neckline's flat. Everything about it's pretty dandy. But a lot of times these really small ones only take 2, 3, 4 weeks to develop. I don't put a lot into them, but I think everything else with this looks good. I mean, everything. Stokes, MACD both look good. The pattern, it'd just be nice to see a little more volume, but obviously you want this thing to stay about where it is so we can catch it possibly. So we'll see what the action looks like on Monday. Illumina, one of the few bullish candidates. Pharmaceutical biotech, talked about this in the market update, right? Where it's been beat up big time. I mean, this thing was $240 just in July, and we hit 130. We were off $90 in just about 2 months. So it's making its way back, big gap up. Not sure if that was earnings and the bubble's gone already, but huge jump in volume, huge gap to the upside. So if it pulls back a little bit and stays looking bullish, then I'd be interested in this. In fact, it's $4 away from the entry point already. Even though I know it doesn't look like much, but that's $17 of potential basically. So pulls back anywhere at about 162, 163, somewhere in there, then something we'll take a more serious look at. So it may take later in the week to develop. Same thing with Intuit. Beautiful evening doji star. Right at a resistance level, $100.40. Not only that, right at the $100 level, it closed at $99.39, and then sold off on Thursday, and then Friday it continued. And the volume accelerated a little bit on Friday. I didn't even see this. How did I not catch that? Earnings is 11.19. We saw that going through the list. So yeah, obviously that one slipped past me. So Intuit, probably not a player until after earnings on Wednesday. OMC, following through methods. Pretty good looking one, except for the volume on Friday. Some head and shoulder stuff going on there on a weekly look. There it is. I knew there's another one. We had something where the 200-day came in. The 200-day moving average is broken. It looks like MACD and Stokes are both looking bearish. The bands have pinched a little bit. So if this moves down a little bit, if it doesn't gap down on Monday, and it either opens right about here or maybe it gaps up a little bit and then starts to sell off, I'd be interested in this one. So I like the looks of this one right now. Polaris. Ooh, leisure products. This is the stuff that I find to be absolutely kind of crazy. I mean, Polaris, they do, snowmobiles and four-wheelers and outdoor type of stuff like that, right? And back in, 96, 97, 98, they're $4. 99, they're $8. They're a nice steady growth trajectory, 12, 13. They're going up, 20, 30, 40% a year. They're up at 27 in 05, and then the recession hits, and boom, they get beat up pretty big. In 08, it tanks, goes down to about $6. Bounces back up. It's basically a $20 stock, $15, $20 stock. And to think that they have grown, their profits have grown from, it ran 150. That's 7.5 times. Are you telling me this company is 7.5 times more profitable in 09 or in 2014, 2015 than they were 5 years ago? 5 years before that? It just doesn't make sense. I suppose it's possible, but it just doesn't seem realistic. So it is looking bearish. Obviously, a nice solid bearish trend. So the trend's working in our favor. You got Stokes and MACD both looking extremely bearish. It's sitting right at 107 basically. Sitting at a support level there. If it breaks that, odds are it's going to drop off to about 95. And everything looks bearish. As long as the market's trailing off, this is probably going to go with it too. So I like the looks of Polaris. Raytheon. Another one was a $30 stock. 30 or $40 stock. Now it's 3 to 4 times higher in just 3 years. Was Raytheon maybe? Aerospace defense possibly. Except that our government's cutting all defense spending. So how's a company like this still? Anyway, I don't know. So we've basically been going sideways. Looking for a break back to the downside. This could be one to flip over because the momentum, it has been to the upside recently. And then the last 2 or 3 weeks, we've just been sideways, volumes drying up. So this could go either way. Planning for a break back to the downside considering the market conditions. But we'll see what happens with it. So see what the action looks like on Monday. Travelers, we got bearish engulfing, evening star, Tuesday, Wednesday, Thursday, evening star. Tiny bit of follow through yesterday. And nice big potential. What's that, $6? But it's already through, it's $1.35 away from the entry point. So this has got to pop back up to the upside. So I almost would like to see a move to the upside for some of these. So indicators there look bearish. Everything about this looks good from a bearish side. Just hopefully we didn't miss it, right? But if we did, we did. So win, kind of a double top. It's not textbook what we would expect exactly, but moving back to the downside. It's already moved. We're talking 13 points in the last week and a half. So for it to drop another 10, 11 points, but you can see that it does it though too. It dropped from 105 to 66 in a matter of 3 or 4 weeks. With very, very only a couple little hiccups to the upside. So, and then it, rallied, it dropped from 72 to 50, 22 points in 2 weeks with basically no stopping. So it's possible, very well could do it. Not necessarily normal, these are not normal drops, but they very well could do it on this with win as well. So we will see what happens. The setups are all there. Things look great for the downside. So we'll take it from there and run with it and see what this week brings us. So hopefully something good. So y'all have a great rest of the day, and we'll see you soon. Bye-bye.